Let's look into the classification of leases by Lessor. Lessor shall classify each lease as an operating lease or a finance lease. Lease classification is determined at the inception date, which is the start date. So, what's the definition of finance lease? A finance lease is a lease that transfers substantially all the risks and rewards incidental to an ownership of an underlying asset to the lessee. So, if there is a transfer of risk and rewards of the ownership to the lessee, then it's a finance lease. So, what's an operating lease? An operating lease is a lease that does not transfer substantially all the risks and rewards incidental to the ownership of an underlying asset to the lessee. So, if there is a transfer of risks and rewards of the ownership of an underlying asset, then it's a finance lease. If there is no transfer, then it's an operating lease. So now IFRS 16 gives us the examples of situations that individually or combination would normally lead to a lease being classified as finance lease. The indicators are called primary indicators, and here are few of the primary indicators mentioned in IFRS 16 for a lease to be classified as finance lease. Number one, the lease transfers ownership of the asset to the lessee by end of the lease term. So if there is a transfer of ownership of the asset to the lessee at the end of the lease term, then the is classified as finance lease for the lessor. The lessee has an option to purchase the asset at a price which is expected to be sufficiently lower than the fair value at the date the option becomes exercisable, that at the date of inception of lease, it is reasonably certain that the option will be exercised. So in this case, the lessee has an option to purchase the asset at the end of the lease term, and the purchase value is substantially lower than the fair value at the date of option becomes exercisable. In the third instance, the lease term is for the major part of the economic life of an asset, even if the title is not transferred. Let's say if the economic of life of an asset is 10 years and the lease term is for 9 years, then even if the title is not transferred, the lease will be recognized as finance lease in the books of lessor. The fourth instance, at the inception of the lease, the present value of minimum lease payments amounts to at least substantially all the fair value of the leased assets. This is important. So, at the inception of the lease, we have to calculate the present value of the minimum lease payments. And if it is substantially or at least equal or more or less equal to the fair value of the leased asset, then the lease is to be classified as finance lease. Last instance, the leased assets are of specified nature such that only lessee can use them without major modifications being made. If the asset is made only for the lessee and it can't be used by any other third party, then the lease has to be classified as finance lease in the books of lessor. Lease of land and buildings. Lease of lands are assessed in the same way as all other leases. Land normally has indefinite economic life, so it is unlikely that the lease term will be for the major part of the economic life of an asset. Nevertheless, some of the other characteristics described in the previous section may be met, in which case the lease of the land may be in finance lease. In particular, at the date of inception, if the present value of the lease payment amounts to at least substantially all the fair value of the underlying assets, then it is possible that the lease of land will be a finance lease. Let's say if the land is for 100,000 and your present value of all the lease payments is more or less equal to 100,000, then the lease has to be classified as finance lease in the books of lessor. Whenever necessary, in order to classify and account for a lease of land and building, a lessor should allocate the lease payments between land and a building elements in proportion to the fair value of the lease interest in the land element and the building element of the lease at the inception date. So whenever they have to classify between lease of land and a building, then they have to use a relative fair value in order to proportionate the lease payments between land and the building.